500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hey everybody, and welcome to another TrendSpider Technical Analysis Series video. In today's video, we're going to be discussing one of the most well-known and commonly used indicators, the VWAP, or Volume Weighted Average Price. This indicator is used by retail and professional traders alike, and the reason for this is because it utilizes the two most important components of technical analysis, price and volume. The VWAP is calculated by taking the average price on a candle, multiplying that value by the volume on the candle, and then dividing by total volume for the session. If price is trading above the VWAP, that generally suggests strength and that buyers are currently in control of the tape. If price is trading below the VWAP, that generally suggests weakness and that sellers are in control of the tape. Many traders utilize VWAP to help them determine when to consider getting into or out of trades. So let's go through a few basic examples of what to be looking for to consider going long or short based off of the VWAP indicator. In the chart here, I've got 2 days worth of price action, and we could see two unique VWAP scenarios. On the left, a more bullish scenario. Price begins the day firmly below the VWAP. It acts as nice resistance until later in the morning, where we start to see the beginnings of a change of trend. That's confirmed when price is able to find support at the VWAP here in the retest, and then price moves nicely to the upside. On the right, we see the opposite. Price gains the VWAP early in the session, fails below it, which begins the change of trend, and then when it retests the VWAP later in the morning, right here, it fails again and continues lower. In both scenarios, it's important to note that VWAP is establishing itself early in the day, so it would be considered a bit more risky to take a trade based off of the VWAP early on. A more risk-adverse trader might prefer to wait for that retest. Now that we understand a very basic way of utilizing the VWAP indicator, let's talk through some more advanced alternative approaches. One of the main ideas to consider when using VWAP is mean reversion. In trading, mean reversion would be defined as the assumption that an asset's price will tend to converge to the average price over time. Since we know that VWAP represents the average price paid over the course of a session, mean reversion then suggests that price should return to it if or when price gets extended too far in either direction. We can see that in the next example here on SPY. Again, as with previous days, we see price oscillate around the VWAP early on in the day. It breaks up and then it breaks down, and we get multiple tests before it ultimately fails midday, right around here. At this particular day's low, price was about 1.35% away from the VWAP, and shortly thereafter, it manages to find its way back to the VWAP and then even get up and over it. The reason for this return to the VWAP is that market participants began to see that there was value in these lower prices and subsequently bought the stock back up. The question then is, how do we determine when price is too extended in one direction or another? This brings into focus the idea of adding additional risk parameters or indicators that can provide clues that price might be about to turn. One idea here would be to add the RSI indicator and look for divergences between RSI and price. Let's add the RSI indicator. Now I've got the RSI indicator up on my chart here. Divergence is the idea of two things moving in different directions when they should move in tandem. If price is making lower lows or higher highs, then so too should RSI. When price makes lower lows and RSI does not, that's divergence. This idea is illustrated beautifully here. We can see that price makes a low, RSI makes a low. Price makes a lower low, RSI makes a higher low. Price again makes a lower low, and RSI makes a higher low. Combine this divergence with the idea that price is overextended to the downside, and it becomes more evident why price makes the move that it did. Another thing that we can utilize is volume. Let's add that to our chart. Notice how volume dried up throughout the slow move to the downside. As we start getting closer to the lows, volume starts coming in, suggesting a lot more transactions at these lower levels. This increase in volume suggests that price might be about to turn. And when you pair that with price getting extended from the VWAP, you have a recipe for a potentially more successful trade. Now, let's put these concepts into action using some of the other tools available on TrendSpider. Knowing what you're looking for is half the battle. The other half is finding it. We can use TrendSpider's Market Scanner to find these conditions occurring in real time. Let's use this RSI divergence idea. I've got my scanner up here and I've actually already inputted the criteria. So let's talk through what this criteria is looking for. The first line says price close less than VWAP by at least 1%. That means price is below the VWAP by at least 1%. We have RSI greater than RSI 5 candles ago. RSI 5 candles ago greater than RSI 10 candles ago. So RSI is increasing. And then we have the low on the current candle is less than the low 5 candles ago. The low 5 candles ago is less than the low 10 candles ago. So price, the lows are decreasing. Now that we've defined the divergence and that price is extended away from the VWAP, we can run this scan and see what we find. Next, now that we've found a few symbols that meet our criteria, these guys right here, now we can backtest them and see when these conditions have been met in the past, how do these names perform? Let's do that. We're going to go to the strategy tester here. I'm going to click on script actions, load from template, VWAP with RSI divergence. I'm just going to choose a certain number of candles having passed, pick how far back I want to look, and it's going to go ahead and run this test for me. So I can very quickly and easily see how a name performs. This name happens to be meeting this criteria. Although this strategy performs better than the buy and hold, this doesn't yield a very good return. So I might look to a different name for a potential trade. One last example of how these conditions can be used on the platform is within the Smart Checklist. The Smart Checklist allows us to input criteria and quickly see what if that criteria is actually true right now. Instead of zooming into the chart and looking at all the indicators individually, we could see it all with a click of a button. So let me add that. I'm going to go to the sidebar here. I'm going to say show sidebar. And I've gone ahead and added the conditions for the VWAP with the RSI divergence into my Smart Checklist. I can see, of course, this name is meeting all of this criteria. I've got a watch list of names here, and I can click through all of these names. As I click through, I can see what criteria are being met. Apple clearly is not meeting all of this criteria right now. And I could just go through the list here. This would make it much easier for me to find names that are meeting this criteria right now in my list. So there you have it, folks, a simple breakdown of the VWAP indicator and some of the interesting ways that you can utilize it on the platform. I hope you found this helpful, and I look forward to seeing you in the next Technical Analysis Series video. As always, happy trading and catch you next time.